Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Setup Sunday. What a couple of days it has been, that's for sure. What a week it has been. A week ago we were at 70, albeit coming off of some high sentiment. Technicals, based on my system, looked good. So I'll defend that analysis. It just didn't pan out, obviously. What did we have after Sunday? We had something around 10 billion in Bitcoin supply moved or sold. Didn't get any help from the ETFs either last week. And we had at least, we'll call it half a year's Bitcoin issuance moved and or sold last week, right? That's after the weeks prior, Germany, other Gox stuff, miners. So it's just one thing after another with the supply unlocks at this level. Even still, we were holding 65-ish, high 50s, low to mid to upper 60s, right? It's a massive range. The issue this week wasn't necessarily on our end. It was aided by the legacy side exploding. When people talk about bull markets climbing a wall of worry, this is what they're worried about. Things like this domino effect of leverage unwinding, long-held beliefs about how the world works, unwinding and changing very quickly. The dynamics of this involve the interest rate differential between the Bank of Japan and the Fed. The Bank of Japan raising rates already, the Fed probably cutting rates in September, will make this trade even more painful. So if we do get rates higher later on, and all the leverage isn't rinsed out by then, things could get even worse. We're talking about well over hundreds of billions, in the trillions as far as leverage is concerned, borrowing JPY, buying US equities effectively. And all this stuff is sort of related. We had unemployment data, which I think most sane people expected to be weak. It was weak. It did trigger the SOM rule, which brings about this recession potential that I think we've talked about plenty on this channel. And so from there, things just got worse and worse and worse and worse. And now we've got this risk-off rally. We've got the VIX volatility index up bigly last week. Anytime the VIX is up big, Bitcoin is usually down big. I have a chart on this, but the last time we saw the VIX at this level was when SVB blew up in March 2023. We've got big tech and semiconductors unraveling. We'll take a look at that. The Middle East war escalation is just one more thing, right? It's this and this and this and this and that. It's everything together that is not helpful here. So in some ways, it's kind of a miracle we are even where we're at today, whatever price it is. When you watch this video, it was bouncing around 54, 55K last I checked. Probably not significant for price, but also unhelpful is, again, this is for Bitcoin, not for the country, not for people who live here, but Biden dropping out and Trump re-election odds dropping significantly, because previously they were essentially 100%. And I'd say effectively now, it's certainly closer to 50-50. So everything together is not helping us. And if you want the receipts on coins moving, Arkham is a decent source for that. I posted this on Twitter yesterday. So just outside of everything else that's blowing up in legacy, we've got tons of coins moving around. We also had jump throughout the weekend selling, which it looks like they could have been purposefully pushing the price down. I don't think it's necessarily manipulation, but they're big enough to do that. So that obviously is not helpful either. On the other side of the coin, we do have Saylor coming in potentially. You know, this isn't like going to save price or anything, but potentially coming in with a $2 billion purchase eventually. I certainly hope he hasn't already done that. He's just like you at home. He's DCAing $1 billion at a time. And as far as quantifying the carry trade unwind, another way to think about it is a long on USD JPY getting margin called or being closed, and then all of the downstream effects, because again, we're not talking about a few $100s here. We're talking about billions and the trillions of dollars, potentially. I saw one figure quoting 20 trillion. I don't have the hard numbers behind that, but that's significant. How this works is when this stuff starts to happen, let's say you work in a shop it's specializes in these types of trades, they become a price agnostic seller or just removing that risk from the book. When the VIX spikes, we have similar downstream effects. So all of these bearish bets will slowly start to unwind, and the lower UJ goes, the more these will have to be unwound. So it's just more pain on top of pain as the UJ just craters. This is a currency, which is wild. It was wild on the way up. It's wilder on the way down. And the problem for Bitcoin is we were correlated negatively, inversely on the way up. And now we're even correlated on the way down. So we really can't win. We are just sort of a dinghy in the hurricane of global liquidity, sloshing around in both directions. So this stuff really needs to calm down before things can get constructive again. And that may take intervention by both central banks. That may take reversing a rate hike by the UJ. It may take some sort of swap line, something from the US, potentially. Much like SVB, post the BTFP, when the liquidity got re-injected into the ecosystem, that's when Bitcoin did well, but we had to eat some significant pain until that happened. Looking at DXY, you would think in a vacuum, if I told you, hey, DXY is going from 105 to 103, this should be bullish for BTC. Should be. But there are other players on the field here causing quite the ruckus. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Paired Ventures, Inc., PVI, DBA, Kraken. Kraken does have a few Forex markets for those wondering, looking to dabble. Certainly probably a bit late, but outside of PAXG, the gold stablecoin, there's the euro. There are places to hide. Okay, there should you want to. Now it's a bit late seeing most of these coins down 10% plus, and we're seeing the usual thing that we see in that alts are beta to BTC. BTC down in a rolling 24-hour period, 11%. Alts down 20%, 18%, right? Significantly more than BTC outside of Solana, but Solana had a pretty significant unwind, likely also jump related for the people looking on chain. A lot of this was related to a jump unwind along with ETH. I'll get to this chart again later, but this is quite ugly. ETH, quite ugly. Just a nasty wick, sub 2K. Year to date, ETH is flat now. If I would have told you first that we would get ETFs at all, and then post ETF, we would be flat year to date, you'd be shocked. Probably. Most people. We still have ETH, BT, or ETH to deal with as far as the unwind there. There may be further unwind from the ETFs this week. We still have a US session Monday for more fun, and the hits just keep on coming. So I would certainly be very careful with any use of leverage or anything like that anywhere on anything right now. Maybe some silver linings here. Global liquidity in USD terms is rising significantly because of DXY weakness. Eventually, and that eventually is probably Q4, not August, not September, but Q4. Eventually, this should be an ally for us in at least the majors and BTC. But this contagion risk is significant. Looking at the unemployment, 4.3, that ticked up decently fast at this point. And again, the issue isn't the absolute level, it's the rate of change and what it potentially suggests going forward, which would be recessionary type conditions, runaway unemployment, a hard landing, rates coming down quickly and significantly, and out of the ashes will come BTC ready to go. But at what price, right? Will we be at the 200-week moving average? Will we be at 50, 60 still? I doubt it. I doubt it personally. But we could, depending on, is there stimulus involved anywhere globally, China, Japan, US? What does the liquidity picture look like? But watching the yield curve uninvert here is scary on top of the rate of change with unemployment. Now, what's going to be interesting is if come September or Jackson Hole, the Fed doesn't signal that they're cutting 50 and they cut 25, or unemployment starts to tick back down, as some people have suggested. Maybe this is some seasonality here. If the Fed has less ammo to cut, then what happens? That's where things are going to get super, super interesting. But I certainly think we're there on the inflation front. For the risk-off rally, we can look to the bonds markets. There are plenty of options here. Over the past several weeks, I've heard almost no one talk about TLT. I've listened because I've been very interested in this trade myself. It still looks great. It still looks like a great trade. Clearly a breakout here on the cloud. This is what you want to see on any trend reversal. And we can go down the list here. This is TMF. This is leveraged. Not quite a breakout, but certainly looks ready to go. TYD, leveraged 10-year ETF, looks great. And we can look at SHY, the 1 to 3 year treasury, looks great. And maybe this is all actually very bearish BTC, because if we are truly experiencing recessionary risk off type stuff into bonds, then maybe BTC is in more trouble than even I think it is. But it's no coincidence that BTC looks like the opposite of SHY. BTC is an inverted SHY basically. But this chart looks great, as does AGG aggregate bond ETF. Is it too late is the question for anyone to rotate into this. That's why you certainly have to be sort of paying attention to some of this stuff and rotate early, maybe add. But I don't think it's too late. It's certainly later than you'd want to be rotating into some of this stuff, because it's going to open significantly higher probably on Monday, but it's a place to hide. It's certainly a place to hide. Gold is another one. It's down from the highs of 2,500, but the chart to me still looks fine. It still looks like it's trying for eventual 2,500 plus breakout. Much like everything else, you just got to be careful with the risk off rally. Even gold being gold, it gets caught up in that. But it's certainly gone down less than tech, less than everything else. So in that regard, it's a place to hide out. Looking at the VIX, if you look at the VIX relative to BTC, since BTC's inception, anytime we have massive spikes in the VIX, Bitcoin has a bad time. Last time the VIX was at 30 was March 2023. We're right there, or we tapped 30 on Friday. We'll see what we tap on Monday. And this just means fear in the market. Was the VIX too low? Was the VIX complacent? I don't think so. I mean, it was hovering between 11 and 20. But because it was so low, this is how you see these types of moves being semi-surprising, semi-out of the blue, and you get a massive reaction. Looking at the semis, this is SMH. On Robinhood, it was around 208, so it's down from Friday. You've got NVIDIA back at 100, probably opens under 100, I'd imagine, come Monday. That's a full gap fill. The issue here is I don't think anybody's excited to buy at 100. They were excited to buy in May, but now it goes from looking cheap to looking expensive with everything else unwinding. Cloud's not on your side here either. It's not on the chart, but definitely leaning bearish on the cloud there. You've got ES. This is the 4-hour S&P 500 futures, also experiencing a significant reversal. So when we have this global unwind, you kind of just have to let it do its thing and hope that you weren't caught up in leverage on the other side. But I'd expect just about everything across the board to be angry come Monday. So that leaves us with crypto. We do have a potential death cross coming up, which that's going to get a bunch of headlines if it hasn't already. We did have a death cross in Q3 2023 that quickly changed course. I don't think this one will change course as quickly, but if in Q4 we see, let's say October, we see the golden cross come October, we come out of this and survive, that makes the next trade in 2 months much easier. But you can't long on a death cross. You can't long on a chart that looks like this. You just can't. You could say, you know what, this guy, he was bearish. He was bullish last week. He's bearish today. What does he know? That's fair. But that 70K level got rejected pretty swiftly. The one thing that could change course here, again, is if the central banks coordinate some intervention. But that probably takes a little bit more pain across the board. And we may see that Monday. Just like SVB, right? We just had pain and then V bottom. I wouldn't bet on that, but it's something to watch and something to look for if we get central bank intervention. Another way to look at this, we're still in the range, I guess. We're at the bottom of the range. I'm not a range trader, but I'd rather take a stab always at the highs rather than the lows. I do not like buying weakness when there's this much uncertainty out there. And this measures to the 40s, right? It just is what it is. You take the high, you take the low. You could be slightly less aggressive here and just say it measures to the ETF open level. I assume by the time we get there, if we get there, we will be discussing the 200-week moving average as support, but not a baseline expectation until we break down in a more significant way, even though this has been rather significant. Looking at the cloud, looking at the old pitchfork, starting to get back into the pitchfork, and there's more confluence for this old rate of change pre-ETFs back into the 40s. Cloud briefly tipped from bullish back to bearish, and the break of 62 into the cloud was the warning signal. But hey, next time we get back above the daily cloud, I will be bullish again, just like I was bullish back here. So that's not going to change. If you look at all the times the daily cloud has provided excellent entries and led to continuation versus times like this, times like May, typically you gain 5, lose 2, gain 10, lose 3, gain 15, lose 1, something like that. So I don't think there's any issues with the cloud. It's just the swiftness at the whiplash. We go from 66 plus to 55, right? Basically in a week. Just always surprising to see that. No matter who you are, looking at the quarterly returns, seasonality, or also in a weak seasonal period, Q3, the weakest median return since 2013. ETH as well, back half of the year. Not generally as bullish as the front half. Looking at August, September, specifically for Bitcoin, again, we are not, there's really nothing left here outside of central bank intervention that can save us. I really don't know. Maybe the ETFs, if the ETFs come in with both hands and get excited. I doubt we see that, but hey, that's something else to watch for. What would make this worse is obviously more supply unlocks, which why not? We've had probably a year's worth of BTC selling up here. Already, what's another 10 billion amongst friends, you know? Looking at ETH, it had signs of a descending triangle below the cloud. It broke down. Okay, what's next? You know, you could buy this, I guess. You could buy sub 2K, but you're still dealing with the ETH Unwind. I would watch to see what the ETFs do this week, but this is not a bullish chart whatsoever. Really, what I'm going to do is watch how this evolves into October, let this have its temper tantrum, let it throw its Cheerios on the ground, whatever, and just wait for either a falling wedge, an inverted head and shoulders, a Adam Eve, 3 drives, any of that fun stuff that we usually look for. It's way too early to jump into a chart that looks like this. It went nowhere throughout most of 2024, and now it's back to the yearly open there. ETH BTC almost back to its old level in 2021 and almost to the harmonic pattern level. If the 5 people who watched the videos months ago will remember this, I hope, but still below the 50-week moving average. Definitely something to watch on the way up. Sub 04 would be something to watch for. An old inverted head and shoulders resistance level that could be support. But again, this is not conducive for bullish reversal. I know a lot of people were super bullish ETH BTC. Well, that didn't work out so well. Sol also kind of cliffing again. If it breaks here, you'd imagine, based on the TA, sub 100 pretty easily. It just really depends on the US session and how deep are we in this unwind. Are we in the beginning, the middle, the end? I imagine we're past the initial burst, but I fear we're not even to the middle of it yet. I fear there's more to go. So that's why I don't think crypto's going to fare too well here over the next 2 months. Link already broke down. I'm just highlighting this one because I had talked about this. Returning to the October breakout levels, that looks very likely for most of these coins on the USD pairs. Total 2, breaking down, just this parabolic puke. Falling knives aren't for me, so I'm just going to wait this out. As are most people, I'd imagine, just waiting to see what happens, where the chips fall. Alts have been a no-go on the charts for a long time. A long, long time. We've been talking about this chart every Wednesday, and not once has it signaled a buy. Not once. So hey, it's darkest before dawn, and it's getting darker out there. So be careful. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.